Hey everybody, great to have you back here for Swing Trading. My name is Mike Fairborn. Hope you're having a good day and a good day in the markets today. Folks, I wanted to look at swing trading and maybe trying to capture some of those higher premiums that might be out there. Those that might be higher, clearly higher than the VIX in terms of the volatility index. And so we're going to talk about that a little bit. We're going to talk about implied volatility. It's not to say that we won't look at maybe comparisons of also adding to underlying positions or just adding stock trades into these paper trades, but they want to focus in on some of the spread trades today as we look at relatively high premiums. All right, well, with that, looking forward to going into that with you. We'll review some of our classes from a couple of weeks ago. JB filled in last week. I really appreciate him doing that. Always has an interesting discussion. And with that, though, we'd like to welcome each of you here. We got Life in the Fast Lane. All right, and David Trezil, as well as Healthy You. Folks, I'm joined in the chat by a good friend of mine, Cameron May. Appreciate Cam being here, very knowledgeable. It's a privilege to have him on board. You can follow us both on X, Mike Fairborn CS, Cameron May CS as well. You're going to want to make sure you put the CS at the end of our names, and our names have to be spelled correctly, because we do have some imposters out there that have been tracking us along and reposting what we post. And I'm afraid, a lot of people that have joined have actually joined imposters because there's quite a few followers that they have. So just a quick note on that. It's got to be the correct spelling, Cameron May, CS at the end. Okay. With that, hello to you, Kevin. We've got Beth and the Great Gambler all on board with us. Terrific. Well, let's jump into our discussion to get going. But first off, let's hit some disclosures, I should say first. So information here is for general information purposes only. Options carry a high level of risk. They're not suitable for all investors. Spread trading must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Short puts risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, this webcast, of course, we do discuss quite a bit of technical analysis. Other approaches, including fundamental analysis, may assert very different views. In fact, sometimes we do incorporate fundamentals into this class as well. Okay, Schwab does not recommend the use of technical analysis as a sole means of investment research. Paper money software application is for educational purposes only as well. Finally, investing does involve risk, including the loss of principal, and no past performance is no guarantee of future results. So with that, let's go ahead and share our screen. Oh, I've got to go ahead and just pull this up right now so we've got it rolling. But there we go. Okay, very good. Sorry about that. I was making just a last minute adjustment, looking at a couple of different things, making some comparisons here as we took a look at it. Now, here is a look at the S&P 500. Folks, more than anything, because we have looked at bear flags in this class, we've looked at bull flags. A lot of what we do is we establish it with the direction of the market. The market is higher. In fact, the market, I think, technically did break above the prior high right there. In fact, yeah, it did slightly break above that. I'll draw that line again, maybe a little bit more straight this time. But you can see we did break above some prior highs, and that puts us into an interesting position too, because this longer term trend, I mean, when you're making higher highs and higher lows, and we've had a few of these, even on a shorter term basis, all else equal, that could still represent a positive, as we've got over here. We do not have, I mean, obviously there may be, in fact, there very well could be a fair amount of resistance right up top here, folks, because, well, we hit it a few times, didn't we? Right there, bounce, bounce, bounce. Yeah, I mean, all through here and here again. So we want to keep watch on that as well, but that doesn't mean that we're necessarily going to stop and the trend might not go higher. It also means it's not going to, continue. I mean, it could also, it could drop as well. One of the things you want to focus in on here, though, when we're looking at the markets, I'm just going to throw this out real quick. Folks, sometimes that intermediate moving average can be quite helpful. Here's a simple moving average right here. I'll throw this on. I think many people will choose the 30 to represent kind of a longer, more of an intermediate type trend. There you go. Are we still holding above the 30-period moving average? We are. And all else equal, I mean, we broke above that actually towards the end of April here, still making new highs. If we don't get below that level, well, then maybe, we're still continuing up. In fact, here is just a good example of that because we're looking at a 1-year chart over here. But you can see when you take out one of these longer term moving averages, and we sort of had, well, sort of a similar kind of a pattern over here where we broke above a prior high. You can see us breaking above a high over here. We kind of rounded and then we actually dipped, but the signal came when you bounced back up above that 30 because you ran up, bounced again, you ran up again. And right there, that's actually, a couple of really interesting segments in terms of market movement to the upside. Okay, that's all I really wanted to hit there on the market, though. But just a general idea and some ideas maybe in terms of how to kind of understand that trend and maybe the strength behind it or indications of potential weakness if you're breaking below the, let's say, a 30-period moving average as an example there. All right, I did want to pull up too, I wanted to go over here and just look at the sector grid real briefly, just to kind of highlight, because this is always a very interesting place for us to look for areas where there could be strength. And where we have been seeing some strength as of late have really been in, info tech. We did see it in industrials as well. That's a little harder to see against that blue. Let's go ahead and just change that to a yellow. But there you go. Technology, communication services, as well as industrials. And one of the reasons why these could be interesting is because they might set up for the possibility of maybe a longer term flag. And if you get the whole sector in here flagging in the S&P 500, and here's one over here in communication services, kind of that, I've heard of a bull flag. I've also heard of a bull flat, which is just kind of a flat flag. And those can be very, very strong as well. But we are seeing some indications here of maybe a bull flag, and you're getting one in industrials too. And this might be related to tariffs benefiting industrial companies in the US. But of these three, it looks like technology is actually breaking out. In fact, let's just zoom in on that right now. There's the maximum as we maximize it. Notice it looks a lot like the S&P 500 actually. So where is the S&P 500 getting a lot of its weight? Remember, it's a weighted index. Technology. And we're breaking higher here. This is just an interesting way to kind of help determine where maybe some of the strength is at as we look for potential premiums out there in the market. A quick note on technology. If we go over here and we look at, say, for example, the Market Watch tab under Visualize, and there is the S&P 500. It is market weighted. And what's been moving it? Well, technology. There you go. Look, this is all a technology group. In fact, you can see that box. In fact, we've got information technology right here with Microsoft and others. And well, I think it's this entire group, this whole group over here. And you can see where those big blocks are. Market weighted. It's kind of giving the shape of the S&P 500 what it's having right now, which is stronger than many of the other industries, right? So that is a consideration. And finally, last thing, since we're looking at it, we're going to be looking at selling some premiums that are relatively high compared to, let's say, what the VIX is showing us right here. The VIX is about 17-ish. So we're looking somewhere around maybe 2 times the VIX in terms of implied volatility, just IV for short. Implied vol, and we'll talk about implied volatility right here. But folks, today, when we dive on in, once we get past our review, the whole idea is this. We're looking at, there has been a lot of ups and downs in the market, and it's been kind of like, as we saw in the S&P 500, it's been a little bit choppy. Now, if prices are choppy, sometimes those bull flags or any sort of a price pattern that we might be looking at, inverted head and shoulders pattern, wedges, pennants, whatever the case might be, sometimes they do this. They just sort of drag around a little bit. What can be helpful here is, for example, selling a put right down below here. So I'm just going to say sell put below that price, even before you have the indication, folks, that it's ready to break out. So in other words, it still might be consolidating. Okay. And you sell a put and maybe buy a put down here. You buy the put. So you got the sell the put, you got the buy the put down here, creating that short put vertical to take advantage of maybe some of the choppiness we've been getting in the market. I mean, it's like one day, it's risk on, the other day risk off. You see gold kind of bouncing around a little bit too. And so those sorts of scenarios are something to kind of consider. But that's just generally what I want to be looking at today so that we could take advantage of maybe that sideways range with higher implied volatility, because a lot of these flags are just kind of still holding up in the market. All right, well, let's do this. I want to take a look at our some trades from a couple of weeks ago. This is one on AEM that we did, Agnico Eagle Mines. And this was, you can see our expectation over here with it. What was our expectation? Well, there it is up top. We thought that perhaps we might get a flag pattern here. We've had a series of flag patterns previously, guys. Remember this? I mean, over here, this whole thing going back, and this was really, I don't want to say the performer in the gold miners, but it was clearly one of the top or better performers. Now, it's all in past, that's all hindsight, and things can change in the future, of course. But sometimes those trends still look strong, and it might be for an interesting reason. In fact, a lot of companies, this Agnico Eagle Mines, they had a lot of their mines in the U.S. In fact, I don't even know if they have any mines outside the U.S. Other companies like Barrick Gold, they got the vast majority outside the U.S., and they had some issues. When the price of gold goes up, you know who likes gold? People in these different countries like to come in and try to get gold from the mines, and so too do the governments. And that was one issue that Barrick had an issue with. Long story short, Agnico Eagle Mines tended to perform really quite well with the price of gold rising, and that was part of our trade on this. We could have looked at Barrick, but we chose Agnico, and it is still showing some pretty interesting strength, folks, out of the gates. So it kind of moved. We did purchase originally. In fact, if we go to it right now, AEM right here, we bought it at, about 112. It's at 120. It was 112.33, 122.47. We bought 100 shares. So we'll just say on our underlying stock trade for this swing trade, we are at, easier just to go 1K. So this is the paper money trade, but that's where we're at right now, about 1,000 on the stock. Now, we did do an option trade too. We went way out of the money. We took a totally different course on that. Well, let's look at that in a second. But what do you guys think? Do we take the money and run, or do we hold firm? One thing I will say is we have yet to break above these highs, and we're getting very close to it. There is some resistance here. There's also the price target right here, but does it look okay? I mean, let's break this down a little bit. I'm not going to put it out as a poll because I've kind of got an idea that if we could still just stick around in this a little bit longer, and perhaps for this reason. Look at the move out of the gates right here. Remember, we talked about the bull flag and then a bull flat? That's a mini flag within our larger flag. And if that were to unfold, well, guess what? Believe it or not, we can do another retracement up through here and just see if that puts us up towards our larger flag target. You get this all the time. Not all the time, but it's frequent enough where I sure have caught onto it. I mean, you can get flags, and a lot of traders do. I mean, they talk about it. It's not just me. I'm just, you see it enough times, it kind of sticks out. But look at this down here. If I go over here, I'm going to use the Fibonacci extension. So where I'm at, folks, I'm just bottom right-hand corner, my little drawing tool. Quickest way in the world to get to it, just click on that icon to the right. Fib extensions. Click down here at the bottom. We'll click one more time here, and boom, it's going to give us our 100% retracement level. Okay. So there you go. Where is our 100% target? Geez, that's kind of hard to see those lines. I might have to go like, oh, wow. No, I'm not going to be able to see it. I think I can tell you, though, that the 100% is at our big bold line up. Well, bag it. Sorry, it just didn't work until now. What'd I do? I don't know. Maybe I did something else. I zoomed in, I guess. Okay, so there's our target for the longer term flag, right? That's it right there. That's the yellow line. That was based on this longer term move over here, right? And then we consolidated, we ran up again. But again, we have a smaller term flag pattern like right in here where we measure off this range, and that puts us just below this point. So even on the smaller flag, which by the way, those smaller flags can look strong too. I mean, that was I've heard of a flag or a bull flat with a very, very strong breeze. They say like on a flag, right? You're not getting hardly any pullback here at all. So this could still be set for a rally, just kind of investigating it just based on the price pattern itself. So we might still reach up to what level is that? Right about 130. I'll tell you what we're going to do. We're going to give it a little bit more room because I'll take these off for now. But now that we have that 130 in mind, that's still another, well, close to 8 points, right? So I'm going to right click up top, go down here, create alert. And what I'm going to do is I'm going to send this through. And now there was a question that we had earlier in the session that I was doing this morning, is actually quite early. It was the futures class, 7:30 this morning, Mountain Time that is. But I just wanted to explain how this worked too, because I mentioned that I would in the chat try to explain this. So let's just do this right now. I'm going to go ahead and just say target or small flag. All right. And a question mark. I created that right there. And it set that line up, folks, exactly where I right clicked at. Now, if any time I wanted to come in here and let's see, I can always adjust it too if I wanted to, just drag and drop it if I wanted to. Yeah, put a little bit closer to 130. There we go. So I just got it very, very close. It's just okay, that's close enough. I'm a penny away. That's the point I was looking at. There's the smaller flag. I wanted to look at it here, but then also you can see where our target's set up to take that trade off. Okay, the bottom line is it's kind of doing what we had sort of expected or hoped it would do, is sort of follow through with gold breaking out as well. AEM continues to be a strong player in that group. Now, this is just stock. We did do an option as well. We're getting about 1,000 here right now in paper money, $1,000. How did an out of the money short put vertical do? And when we did it, it was out of the money. We said, hey, there's kind of a risk trade, and there's one that's a lot. We could say let's put it this way: there's more risk at stake because there's more loss potential on the long stock, but there was defined risk on this short put vertical, and it was further out of the money too. I've got to actually, it's way down here now, but we did do, let's see, it was a 2 wide, and you can see down here, of course, this is going to probably have moved in our favor. So yeah, P&L on this for a single contract, equivalent of 100 stock shares if we were looking at it in terms of stock, but there you go. We'd sold that. It made, so it was 320 when we sold it. It is now down to 35 cents. Okay, that could have accounted for a sideways move. We could have still tried to bring in some income. The problem is though, I mean, not problem, but we also bought a put down here. I didn't want to say problem, but it's going to reduce our credit because this is going to cost us 233. So even though we're up 282, the 233 in the short put vertical, because it was only a 2 wide, is down that much. But the difference is, our potential gain at the end when we decide to sell, if we were able to sell at these levels, that is. So I'm just going to let this one sit because it's still a little ways down. And what do we have? 17 days left. The max gain is at expiration on this, but that, as you can see, won't quite yield 320. If we make 320 here, we'll exclude commissions for just a second. But then we lose on that 248. 248. Well, it's not quite $100, is it, that we're making? So compare that with the stock. Again, though, we had defined risk on the short put vertical, but on this we didn't. Of course, we had some levels of a potential stop down here. And by the way, what we can do too with this, I'm going to raise the stop up as well above, let's see, at least below this point, above that point right there. Okay, so I'll just raise that up because we didn't need to keep it all the way down at the bottom. So I just put it below today's low. Now, actually, let's give it a little bit more room just in case. I'm just going to put it below this low. What I'm really looking at, folks, is it's going to be certainly below that line right there is going to be above the 20 period moving averages. We're starting to run a little bit. But right now, just kind of monitoring it. We'll see what happens. The other thing too, though, is if were to get a Harami pattern right here, this is not too unusual to get this in a rally, but you still want to watch this close because perhaps, some people that do have the paper trade in might want to lock it in at a little bit higher. But right now, we'll give it a chance to roll. Okay. Very good. Was that the JOLTS report that you're referring to there, Probability Trader? I know that came out today, and the JOLTS report looked somewhat strong. I think ADP gives the JOLTS, doesn't it? Yeah, interesting. Oh, by the way, Thea says, energy sector gathering any potential energy. Well, that's interesting. We'll take a look at one of those here in just a second, actually. Energy was, and a lot of times too, energy is kind of cyclical. And during the summer times, there's more uses for it. People travel more frequently. And a lot of times on a seasonal pattern, you might see energy strong, just as a kind of a side note there. By the way, Thea, I did catch another one of your comments in a prior class about, are we about finished with the market forecast? As a matter of fact, we are. So we're going to be looking at maybe the advanced decline line come Friday in that ThinkScript class. Just as a side note, because I missed that in Friday's ThinkScript class. So, all right, we should be caught up there. But yeah, I think the JOLTS showed some strength. And folks, I'll be honest with you, just a quick note on this. I was looking at those numbers as they came out today. It's fascinating. I don't think consumers, they rarely stop spending, especially if they believe that there are still jobs out there in the market. If the job market starts to diminish a lot, that's when they stop spending. But as long as there's a lot of job availability, they keep a lot of times they just keep spending. In fact, I can't think of a time when they really hadn't. So that report can be quite interesting. As a side note, there's some comments on that. All right, well, let's continue on. So we got those two. You can see how they worked out comparably. But one had more risk, but obviously a lot more reward too associated with it on that one. Okay, we did close out Microsoft. Remember this one? So we went up kind of sideways for a little bit, but we shut this one down. This was actually a couple of weeks ago when we did this, but this was the old kind of a measurement gap in here. Kind of hit our level right through there. By the way, there was some resistance over here, so I thought we did a poll on this, and it looked like, hasn't done too much since, has it? It's been really quite flat. Okay. A quick note on this too, though. If there was an expectation for prices coming down, some people might consider doing like a long put vertical if they thought it might be, it met its measurement gap. It had, so that price pattern fulfilled. It's at a resistance level right now. If there was an expectation that it might pull back a little bit, and what would give you that expectation? Well, after it's run up to this high point, it had a pullback. And each one of these rallies up, that's a pretty big pullback. Yeah, that was a decent pullback right here again. Decent pullback. Will it do it again? We don't know. That's kind of the history of this, but it could pull back a little bit. And sometimes what people might do is they might buy a put and sell one lower. Okay, so that's something. I just want to throw that out there. But the trend is still up, and so that's why somebody might use like something that has a long put vertical that has that defined risk component, right? You're only held, the risk is only as far as the debit that you paid on something like that. Okay. All right. I was actually looking at that earlier as I mentioned it. This is a trade I did since I wasn't in this class last week. I was in my markets and sectors analysis class where we do a lot of top-down trades. This was a trade that we'd done. It was only 25 shares, and for good reason, folks, because we're up in the $500 range. Can get expensive in the $500 range. But we put it in as a top-down trade, kind of like a tariff sort of a trade. John Deere, obviously, a lot into farm equipment and how tariffs are structured. Maybe that could benefit something like John Deere, but you could see the longer-term trend and the bull flag right there. We just began to break out today. So this is one that also could be, we put 25 shares on, but it's starting to break out a little bit. Some might say, well, Mike, now you're finally getting the possibility, because that is a new low, of a hold right there. Close above the high of the low day. And as you guys know, sometimes when you get the close above the high of the low day, particularly at the end of a flag pattern, that's what can signal the move to the upside. Cahold, cahold, cahold. Do you see it? Every one of these has a close above the high of the low day. In fact, if this was like a kind of a flag pattern here, there's your low, there's the Cahold right there, closing above the high of the low day. High of the low day, high of the low day right there, high of the low day. And that's oftentimes what can get it rolling. Now, will it close above the high of the low day? We're not at the end of the day, so I can't call it a Cahold yet. I should put a question mark there because it still has to close above the high of the low day, which would be, can you guys see it? I'll zoom in. Ooh, right there. Yeah, right there. It's just, we might close above the high to low day. And so this could be, I might just do this because what I can do is we can add to this. Don't worry about the existing 25 shares. I just want to put a trade on here in anticipation of it being a close above the high to low day, 25. So we'll just say there's 25 in one class, 25 in another, but I'm not looking at a combined 50. I just want to say that sometimes in this class, we do wait for that signal to occur, right? The potential kind of initiation of it, of the flag, which is a Cahold, is one way to do it. We've also looked at moving averages, but let's do that. So let's go ahead, even though we're reviewing a trade from last week, we'll go ahead and add it for this class too. I'm just going to add another 25. So I'm going to right click, by custom. Let's just do, so I want to do an OCL bracket, and we'll go down here, and I'm going to show you guys something really cool too. So these are going to be both good till canceled. We've got one above and one below. Let me extend this up a little bit high. I'm just going to say 520 for now. I'm going to visually adjust this. And then for the stop, watch this. I don't think we've done this before in this class, so it's a good time to show it to you. But if I were to look at a shorter term moving average, let's pull it up right now. Here's a simple. Here is our, I don't think we're above the 10 just yet. Just barely, right? Just barely above the 10. Yeah, I don't think it's going to work in this class, but just as a quick note, in case we ever wanted to put like a stop level on a moving average, which is what we do when we're above the T1 target, right? So this is a target for a lot of traders, is they're going to look at the top of the flag pattern, right? As we've talked about. So that's T1 right there. Once we get above the T1, a lot of times we will use a stop, let's say a 10-period moving average. We've used exponential, we've used simple. We just kind of use a variety there. But let's just say, for example, because I did want to show you this, there was a question on it previously, but over here, let's just say we wanted to have it on the stop as an example. We click over here on the wheel at the bottom, right here. So this is our stop. It's not our target on top, but our stop. So if I click on that, I'm going to pull this guy up. Now down below, I can set up a condition for deer. And notice when I get under method right here, you go under study and you can go under edit. And then what we can do is we can actually build a condition using the good old condition wizard. Can I make it bigger for me? No, there we go. I wanted to just kind of, push this down a little bit. It's kind of cool. You can see it. But if I add a condition in here, let's delete this for now. And I'm just going to go up top. I'm going to say study. Simple. I did actually have a simple moving average in there, but I want to show you guys this. Crosses below. So the 10-period moving average crosses below the, I should say price. My bad. Yeah, price. And we'll say closing price crosses below. And now we're in our moving average right here. Simple moving average of 10. Current bar, we can click save. And if we were to click OK, we could actually submit this. So what would happen? I'm going to cancel it though, because I'm not going to do it for now, but I just wanted to highlight this. I did have a couple of questions on it. And by the way, David and some others had pointed out a quick way to do this, and so I appreciate that. But in case we do get above the T1, we're going to be using this in the future for sure. In our simple, let's say our simple moving average is below it. If prices begin to break below that moving average, we have an indicator now that can help us to get out using that same process. Okay, so hopefully I answered that question as well. Wanted to get it because perhaps, well, we'll see what happens with Deere, but maybe, if things play out as we might anticipate, then maybe we'll be above that level for this paper trade. Okay, so let's do this. I'm going to put the stop down though a little bit below, because a lot of times we just put this below the low of the prior day. Let's look at it right now. Let's actually adjust it to 25, not 100. This is our initial 25. I'm going to click right here in this box. You're going to see this right in the same section, just to the left. If you click that, it will line these up. Very, very important, because otherwise we'd be having targets and stops at minus 100, putting in some negative trades in there, some short trades. So let's go ahead and click on confirm. See what we've got here. Again, folks, this is an anticipation of prices going, a hold occurring, and that flag pattern unfolding. Okay. There we go. So we'll see how that unfolds. You can see my second stop, which is right over here. I am going to pull this guy. I'll just wait till it gets filled and we'll pull it on down. But it's I was going to put it below the low of the prior day. All right. So there we have that. Now, okay, let's get into some additional trades today. We were taking a look again at really taking advantage of, or trying to look for relatively high premiums. So taking the VIX right around 17, kind of double that range of the VIX, maybe, in the 30 range, at least at 30. So I've looked at this. Here is Alphabet. Google Alphabet. You can see us right here, a little bit of a flag pattern coming down. Now we did take out this high, which is interesting. It was in that stronger sector of technology. We broke the high, and now what are we doing? We're pulling back close to support right here. If you look real close at it, I've got to zoom in on today, but you might recognize, I think many of you are very good with these candlesticks, but right here, as we're bouncing at support. We'll see if we hold it. But what is that? I think many of you have seen this. It is a candlestick pattern that oftentimes can present itself as a potential reversal, a bounce. It did break higher, right? We broke higher. It's in technology. We broke above these highs, at least off this bottom. And it is sort of interesting too, because this setup is sort of, it's not really, but it's certainly a trend. I'm not even going to go there. It's not really a price pattern, except for this section right there. That's the strongest move to the upside, and there's your pullback. Okay. Now, do we have a signal yet like we did with a close above the high to low day? No. How about a close above, or at least trading above the 10-period moving average? No. We got two that we don't have yet, but what we do have is we have prices pulling down, 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 down. We're still possibly in the development of a potential flag pattern. Now, when prices dip, we know that puts will do what? Puts go up, and if we're selling puts, all else equal, that could be a positive, particularly if you have implied volatility. Now, let's look over here. Or a higher implied volatility. We are in the 30. Let's get some others in here too. Let's see. Yeah, so I'm looking at maybe the 45 here. The reason is we're going to give it just a little bit more time. So what we're looking is we're anticipating a bounce, but it might take its time. It might sort of, I don't know, fluctuate around a certain level. Sometimes these can hold for days, even weeks. But that could work for us if, in fact, we have, go to 15, so let's go 20. 20 strikes. But that could work if we're selling premium, particularly if that premium is higher than, let's say, the normal market premium around 17 for the VIX on the S&P 500. As we look at implied volatility over here, still above that 30 range. This right here is before earnings too. Earnings is later in the month of July, I believe. Historically, it has been. But what we're looking at here is for every percent increase, okay, so I'm going to say percent increase or decrease, right, for every 1%, I should say, 1% up or down, plus or minus percent, up or down. That's going to influence the option by the amount of the Vega. Whoa, I got to get Vega in there. Okay, so let's go over here and hit Vega right there. Here's our Vega column. So you thought that, theta could make a difference, and it sure can. I mean, this is like, what is it on these for each of these? Like if we're looking at the 60 over here, folks, 6 cents a day. Well, look at this. If we move that 1% up or down, the option, this range could adjust by basically 21 cents. 21 cents versus 6 cents. So it can make a big difference. I was going to say, if this was like 17 or half as much, let's just say it's like right around 15 or so. I guess 17 is technically, if you double that, it's about 34. So anyhow, 1632. If you were to cut this in half, folks, this option would be worth a lot less, right? Just because it's going to be influenced, that implied volatility is going to influence the Vega if this was lower. But because it's higher, it's double the VIX for the S&P 500, volatility index for the S&P. So what that does is it gives us a little bit more ground to work with. In fact, this delta over here is right in the mid-range of where we often look. We look between 20 and 40. It's right there at 160. Now, the delta, again, just as a quick note, these delta numbers, how they influence the price of this option, a $1 increase in the underlying over here. I have to mention this just to make sure everybody's on the same page, but a $1 increase on the underlying stock will influence the price of the stock by the Vega. So what would this do in this case? If we went up $1, that should drop the option by, boom, 31 cents. And that could be a positive. That could, all else being equal, could be a positive, obviously, because we're selling that contract. Okay. So let's look at that 160 versus the 155. There's just a 5 wide. In fact, even if you look at these weeklies, you're not going to get anything better than a 5 wide. So I'm going to start off here, and we'll look at the 160 right here. We're going to be selling the 160. And notice down here with the 160, we might have some pretty interesting support right through here. In fact, there was a high here. There was a high here. You kind of held and you bounced as well. That's right at a round number. Well, not round. Well, it's 160, and we might find some support there. But notice, this is where these are where trades where a trade where maybe a trader is just waiting. They're waiting for the possibility of a bounce. It's not to say that they can't still put on a stock trade here. But because we're pulling back, we don't have any indications that that flag pattern is quite ready to move. But traders are saying, like we just looked at, well, you're getting a candlestick pattern. You broke above a high. It's resting on prior support right there thus far. And the price went down, influencing the put higher with a higher volatility. And with that and the flag pattern developing, they might just start to nibble a little bit early. Let's do that right now on this trade. So I'm going to sell the 160 right here at 355, and I'm going to buy the 155. Now let's look at a return on risk on this as well. That's a 124 credit. Let's explain how you can compare the return on risk. What's our risk? Because we are looking at defined risk here relative to our return. So the credit here is, let's get the calculator, max loss. So first of all, 124, we're going to divide that by 376 right here. Okay, 376. So it's about a 30, well, real close to a 33% return on risk That's your return relative to risk, 33% over that time frame. Okay. I want to put that trade in. I'm going to go ahead and just send it through right now that we've looked at it. I put it in, and Google, by the way, or Alphabet. Hey, look at the volume over here. Incredibly high on the stock. Look over here in the open interest column. Wow, in the thousands, and that's, I guess, that was the 50, the 150 is right here as well. But not, I mean, there's not a ton of strength off the bottom, and it still may be, fulfilling a flag pattern. We shall see. This is where traders might speculate and give themselves a little bit of room down here for the price to kind of move. We chose the 160, but there could have been others that we could have chose a little bit lower too. But there you go. Wanted to point that out. Oh, so we can draw some fibs on here too. We can do that by, let's go down here. Let's click in our little drawing tool icon. Let's click right here. There's our fibs. And one of the things we could do on the fib, if we go to the high and pull it down low, where might the resistance be? We're right at 50. So that's an interesting point. And where are we holding at now? Right near 38 too. So a lot of times what traders will look for is prices to get above that 61.8, right? Before a recovery of the upside. We'll see if that happens. But right now it might be early in the game. But hey, then again, if we take a look at the weekly chart, always good to reference the weekly, we've been in a little bit of a sideways range. And the last time we came down to these levels, we had a decent spike, but it took a while. And that could possibly, who knows, that could be okay. Oh, there's our trade right there. I just heard it in my ear. That could be okay if, since we're owning, excuse me, we sold that short put vertical here on the trade. Okay. All right. Well, let's see. Another one we could look at here is Meta. Now, Meta's a little bit further along. We had the flag pattern here, and we broke out of Meta right here. Now, it's a high price stock, and sometimes when it gets high priced, we could still come over here and look at, like, say, for example, what was the delta range we were looking at? 20 to 40. The 640 puts us right in the middle, but a lot of times what we can do is look specifically at 640 is still kind of high. The implied volatility here is almost the same as Alphabet, right? At 32. That seems really quite close, doesn't it? When you look at it, the 640 is about right there. So you're not giving yourself a lot of room. Just curious, what does it look like below 620? And what? Oh, 620 is right there. Okay, let's add just a little bit more. Let's just go like this. We'll add 25 strikes and just look at our 120. 620 to 615. What does this look like? Okay, you can see our return on risk is not going to be as good. It's further out of the money. But if we were to look at something like this, the 620 to 615, that gives us a little bit more breathing room below this low after we've broken out. So I'm going to go ahead and just put this trade on while we've got it. It's only $1 right here, but just as an example, trying to still take advantage of really, an expectation, which is one way that traders will use these too. An expectation of really maybe only 22% is another way to look at it, of us going below that 620 by expiration is one approach. We're taking it a little bit, further out in time here, but I'm just showing you that this could be done. Of course, we could always come over here too and look at a shorter term time frame, raising it up higher, but market's really been kind of dragging a lot. As of, really, I guess the last 3 weeks, not a lot of movement. It's been a little bit of sideways range. So anyways, I'll put it on so we could check that out. And right now, there was a comment too that came in earlier. They mentioned, hey, about energy. CEG showing some strength today, but then it also pulled back. It really opened up quite a bit higher. You can see resistance over here in this range, but it's quite strong. I mean, when you see a candle like this, I always get a little bit concerned because look what we just did. We just closed that major gap. And when you close the gap, sometimes that's when it might come back down. The last time we were at this high, well, we came all the way back down to that low. This could be a long-term trading channel as well. Okay, there's the other fill right there. We got a couple of these in today, a couple of trades, folks, with it's had some higher implied volatility, and to try to help us get those relatively higher premiums relative to maybe peers out there in the market. So I wanted to go through that with you today, just due to the choppiness in the market. This is definitely an area we could look at in the future too, in terms of energy, but we did focus in on technology specifically today. We did Alphabet, we did Meta. Folks, if you're finding value out of these presentations that we're doing here, do me a favor, just smash that like button. Lets me know that you're getting value out of it. And we did a little bit different approach today, but sometimes if the market's taking its time, this can be helpful. Now, all these trades too, we could still look at the stock element, the stock side as well, if we wanted to. They were higher price, so we'd want to reduce the size of those trades perhaps. But keeping that in mind, love to have you subscribe as well. I don't think that we did get a survey today. Maybe I'm wrong. I didn't see one. So I think we're clear there. Nope, Cam didn't. I think we're good. All right, everybody. Hey, it was good being with you today. Look forward to future discussions. We'll see how these trades unfold. See you next time.